You're making a huge mistake if you own a rental property and don't have landlord insurance. One unexpected event could wipe out your entire investment. Most landlords think a standard homeowners insurance policy is enough to cover their rental properties. Spoiler alert, it's not. The second you rent out your property, the risks change completely, and so do the types of insurance you need. In this video, we're breaking down everything you need to know about landlord insurance, what it covers, how much it costs, and how to find the best policy to protect your rental income. Stick around because we'll also expose the common exclusions that could leave you paying out of pocket for damages. So let's dive in. So to kick things off, we're going to understand landlord insurance. But what is it exactly? Well, simply put, it's a specialized insurance policy designed to protect rental property owners from financial losses. It covers property damage, liability, and even lost rental income if your property becomes uninhabitable. Many landlords assume that their standard homeowners insurance will cover a rental unit, but here's the truth. Homeowners insurance is for properties you live in. The moment you rent it out, that coverage doesn't apply. That's where landlord insurance steps in. These are some of the key coverages in landlord insurance, the first one being property protection. Your rental property is a major investment, and property protection ensures that the physical structure is covered against disasters like fire and smoke damage, windstorms and hail, vandalism, burst pipes and water damage, excluding floods, and falling objects like tree branches. If your rental gets damaged by any of these events, landlord insurance covers the cost of repairs or rebuilding. Some policies even include coverage for additional structures like garages, fences, or sheds. Now, the second protection is liability protection. Imagine a tenant or visitor slips and falls on a loose step at your rental property. If they decide to sue, you could be on the hook for thousands in legal fees and medical bills. Landlord liability protection covers legal costs, medical expenses for injured tenants or visitors, and settlements or judgments if you're found liable. This is crucial because lawsuits can quickly drain your savings if you're not properly covered. Now, the other one is a loss of rental income. So what happens if a fire or storm makes your property unlivable? Not only do you need to cover repairs, but you also lose out on rental income. Many landlord policies include loss of rental income coverage, which reimburses you for the rent you would have earned while the property is being repaired. Now we're going to cover the differences between landlord insurance, homeowners insurance, and renters insurance. Now, this is where a lot of landlords get confused, so let's break it down. Homeowners insurance covers owner-occupied homes. It won't cover damages if you're renting the property out. Landlord insurance covers rental properties and the unique risks that come with tenants. Renters insurance then protects tenants' personal belongings, not yours. It also provides liability protection for the tenant themselves. If you're a landlord, your insurance covers the property itself and your liability. It does not cover the tenant's personal items. That's why it's a good idea to require your tenants to carry renter's insurance. Now that we've broken that down, let's take a look at some of the factors influencing landlord insurance costs. The cost of landlord insurance varies based on several factors. On average, landlord insurance costs 25% more than a homeowner's policy. But here's what really impacts your premiums. First up is geographic location. Properties in areas prone to natural disasters like hurricanes, wildfires, or floods, they're going to have higher premiums. Second is the type of property. A single-family home is generally going to cost less to insure than multi-unit properties because they pose a lower risk of frequent claims. And the third thing is coverage amount. A higher coverage limit means higher premiums, but skimping on coverage could leave you financially vulnerable. Now, these are some of the common exclusions in landlord insurance. So before you assume your policy covers everything, read the fine print. Many standard policies do not cover flood damage because you'll need separate flood insurance if your property is in a flood-prone area. Earthquakes as well, they're another separate policy that's required if your rental is in an earthquake zone. Any kind of tenant-caused damage. Normal wear and tear is going to be expected, but intentional damage caused by tenants isn't always covered. And anything that has to deal with maintenance issues. If your HVAC system breaks down due to age, you're responsible for those repairs, not your insurer. Now, these are going to be the costs of landlord insurance, so we're going to talk some numbers here. The average cost of landlord insurance varies by state, but here are some rough estimates. In California, it's about $1,728 per year. Missouri is typically $861 per year. In Florida, you can expect higher rates due to hurricane risks, often exceeding $2,000 annually. Texas, which is similar to Florida, costs range between $1,500 and $2,500 annually. While these are average figures, your specific rate depends on the factors we mentioned earlier. Now, to help you out, we found some of the best landlord insurance providers. With so many insurance companies out there, which ones offer the best coverage? Well, here are some of the top-rated providers for landlord insurance. State Farm, they're known for solid customer service and comprehensive policies. Allstate offers customizable coverage options. Geico offers competitive pricing, but coverage can be limited in some states, so keep that in mind. Progressive is great for bundling with other insurance policies. Liberty Mutual offers a variety of add-ons for extra protection, and Mercury Insurance is a good choice for California landlords. When choosing an insurer, compare quotes from multiple providers and pay close attention to policy details, exclusions, and deductibles. Now we're going to play a game of frequently asked questions. So the first one is, do I need landlord insurance if I have a mortgage? Yes. In fact, many mortgage lenders require you to carry landlord insurance if you're renting out the property. Another question is, can I use my homeowners insurance for rental properties? The answer for that is no. Homeowners insurance does not cover rental properties. You need a separate landlord insurance policy. Should you require your tenants to have renters insurance? Yes, absolutely. Renters insurance protects their personal belongings and can help cover damages they cause, reducing the risk of any kind of dispute. And now, how much coverage do you actually need? Well, at a minimum, you need to cover the full replacement cost of your rental property, plus liability coverage of at least $300,000 to $500,000. So if you're a landlord, skipping landlord insurance is like playing with fire, literally. One accident, lawsuit, or natural disaster could wipe out your rental income and cost you tens of thousands in repair. The good news though, the right landlord insurance policy can protect your investment, your income, and your peace of mind. Take the time to compare quotes, read the fine print, and choose the coverage that fits your property and financial needs. Now, if you want to learn more about protecting your rental property, watch the next video on the biggest mistakes new landlords make. You're not going to want to miss it.